In this video, I'm going to teach you a profitable and most importantly repeatable strategy inside of the market, utilizing one single candlestick alone. And at the time of recording this video, I should have my free course available for you right now. If not, just go into the link in the description down below into my free Discord and you will be able to access my free course. That's basically everything you need in trading and more. But without further ado, let me teach you how you can utilize one single candlestick in your trading.
Foundation to the strategy is going to be the hourly 3 a.m. candle. So this is what we are going to utilize for reversals. So at 3 a.m. you're going to look for a reversal to take place inside of the market, but you're not doing anything until 3 a.m. The only thing you're going to do is look for the market to create liquidity. So if you watch my previous video about external range liquidity, this is how it's going to form. So you're going to look at buy side liquidity above a swing high and sell side liquidity below a swing low until we get to 3 a.m. So once we get to 3 a.m., this line that I've drawn represents 3 a.m. So if we trade lower, take out the sell side liquidity at 3 a.m. We're going to wait for a change in the state of delivery. Once the market changes the state of delivery, then we can look for longs and take out the buy side liquidity. But the key elements to this is waiting for 3 a.m. and waiting for liquidity to be built up above the marketplace and below the marketplace. Once we have this, we're going to utilize one more thing, and that one thing is the midnight opening price. So there's going to be 4 key components to this strategy. It's going to be the 3 a.m. candle. This is where we're going to look for a reversal. Once we have the 3 a.m. candle, we're going to look for midnight opening price. So this is going to show us if the market's overbought or oversold. So if we're above midnight, this is ideal scenarios to look for sells. And if we're below midnight, this is ideal scenarios to look for buys. And then we're going to look at our external liquidity pool. So this is going to be buy side liquidity and sell side liquidity above swing highs and swing lows. So if you haven't watched my video already, previously going over ranges, I would recommend you do so because this video is going to make a lot more sense. So the range that you can use is the Asian range. It doesn't always need to be the Asian range. It just needs to be external liquidity before 3 a.m. and you need to look for the market at 3 a.m. to take out one side of the liquidity. So let's go over a template example of how this all forms. So when you sit in front of a blank canvas chart, the first thing you are going to do is you're going to map out your Asia range. So this is from 8 p.m. to midnight on New York time. So once you map this out, the next thing you are doing is identifying the external liquidity. So once you've ticked out the Asia range, and this is from 8 p.m. to midnight, then you look for the external liquidity. Once you've got this, the next thing you do is wait for midnight opening price. So let's see this on a template example. Okay, so when you sit in front of the chart, the first thing you do is you map out your Asia high. So this is right here, and then you map out your Asia low. Once you map this out, you look for the external liquidity. Well, we have external liquidity above Asia high, and we have external liquidity below Asia low. And the external liquidity comes in forms of swing highs and swing lows. So once we've identified the external liquidity, what is the next step? Well, we look at midnight opening price. And then the last step is the 3 a.m. candle. And this is important. So if we're bullish, you're looking for the market to open up, trade lower, and create the low. So this is on the hourly candle. So this is an open, low, high, close framework. And if we're bearish, you're looking for the market to open up, trade higher, create the high, and then trade lower and make the low. So this is an open, high, low, close framework. So that's pretty much how you will be utilizing the 3 a.m. candle. You must follow it step by step like this. You map out your Asia range, then you look for the external liquidity. So this is your dealing range. Once you have your dealing range, you map out midnight opening price. Once you have midnight opening price, you're only looking to sell once we're above midnight and we take out an Asia high or an external liquidity pool. And you're only looking to buy if we're below midnight opening price and we take out an external liquidity pool or an Asia low. The framework you are going to be using is open, low, high, close if we're bullish, and open, high, low, close if we're bearish at 3 a.m. So at 3 a.m. you're looking for the market to open up, trade lower. As we open up and trade lower, we make the open, then the low, and we're below midnight opening price, and we've traded below an Asia low and an external liquidity pool. Once we see this, we anticipate the market to reverse at 3 a.m. So all the down close candles that were made in this move lower, this is what we wait for the market to trade, get above. Once we have a closure above these down close candles, we look for the market to trade higher and then take out the Asia high or the external liquidity pool. And this is all that we are doing for our framework. So all of this needs to come together for a high probability trade to form. And we're not buying the market randomly. We are going to wait for a change in the state of delivery for the market to confirm it wants to go higher. So we're going to go over a bearish example of this, then we are going to move on to the charts. So when we're bearish, you're mapping out your Asia low and your Asia high for your external liquidity pool. And all you are doing is waiting for 3 a.m. So if we open up and trade higher at 3 a.m., this is viewed as the Judah swing and this is the open high. So we anticipate the market to trade lower and we're above midnight opening price. As we're above midnight opening price, this is ideal scenarios for us to look to sell. And then what do? We wait for the market to change the state of delivery. Once we change the state of delivery, then we are looking for a move to the downside, taking out the Asia low. So this is how simple this strategy is. You're following everything I said step by step. And once everything comes together, then you have a high probability trade. So now let's look at this inside of the market. Okay, so we're going to go over a chart example right now. But when you sit in front of a blank canvas chart, the first thing you do is you map out 8 p.m. to midnight. And this is your Asia range. And you look for external highs and external lows. So right here we have a swing high. This is our external high. And this is our external low. So this is the lowest low made within the Asia range. So this is where we have liquidity above and below the market. And this is the first thing we tick off. We've mapped out our Asia range and then we look for external liquidity. This is resting above this high and this low. And then you can tick off your external liquidity. Once you've identified all of this, what is the next thing you do? Well, you map out the midnight opening price. And you can see right here, we are below midnight opening price before 3 a.m. So this is the ideal scenarios that we are looking to buy. So if we're below midnight opening price, we look to buy. And if we're above midnight opening price, we look to sell. So if we're above midnight opening price and we take out the Asia high and the external high, then we can look for sells. And if we're below midnight opening price and we trade into the external liquidity or Asia low at 3 a.m., then we can look for buys. So we're looking at reversals at specific times and specific levels inside of the market. So what do we do next? We just wait for the 3 a.m. candle. So this red dotted line that I'm pointing out right now is the 3 a.m. candle. And you can see we opened up and we traded lower. Once we traded lower, we traded below the midnight opening price and we traded below into the Asia low. So what is the next thing we do to confirm the market wants to trade higher? We wait for a change in the state of delivery. So we wait for the market to close above these two down close candles. Once we close above with a body above these down close candles, we can anticipate the reversal is going to occur inside of the market. And then we can target the external high that we have mapped out right here from the Asia high. And as you can see, we trade above and close above this down close candle. So this represents a change in the state of delivery. So we had the 3 a.m. candle which opened up, traded lower, took out the liquidity. Once it took out the liquidity, we had a closure above the down close candles and we were below midnight opening price. So now the market can trade higher and trade into the buy side liquidity. So you can see we trade into this fair value gap and the down close candle. So this is an ideal scenario for us to look to buy and target the high that we spoke about right here. And you can see the market trades into the high and we continue trading higher. So this is exactly the framework to the strategy that you will be utilizing. So it's very simple. You map out your Asia range from 8 p.m. to midnight New York, and then you look for the external liquidity within this range. So you look above swing highs and below swing lows within 8 to midnight. And once you have this, then you look at the midnight opening price. You're only looking to sell when we're above midnight opening price, and you're only looking to buy when we're below midnight opening price. And if this overlaps with the 3 a.m. candle, we have a very, very, very high probability trade because we are looking for a reversal at 3 a.m. And once we anticipate the reversal at 3 a.m., how do we confirm that this is going to occur? We wait for a change in the state of delivery. The market changes the state of delivery right here. We have a fair value gap and we utilize this to trade into the external high and the Asia range high. So I hope you found this strategy insightful. I will be uploading a flowchart regarding this strategy on my Twitter page, so make sure you're following that. But other than that, I want to thank you for watching and keep in mind I'm rooting for you and I hope you find success in this business. As always, have a good rest of your day.